Let's go ahead and call this meeting to order. This is our MCE Finance Committee meeting. Today is Thursday, June 25th, 2026. We're calling this meeting to order at 10:02. Can we please have roll call?
Yes. Belvedere,
Present.
Lafayette,
Present.
Larkspur,
Here.
Napa County,
Here.
Vallejo. Quorum established.
Excellent. Let's move on to public open time, also known as public comment, for any items not on the agenda. Do we have any public comment?
I see no raised hands, Chair.
Very much. Then moving on to our consent calendar, we have one item on the consent calendar, and those are meeting minutes from February 8th, 2026. Do we have any changes or edits for this consent item? And if not, do we have any public comment?
I see no raised hands online. Justine, can you confirm there's no public comment in Concord?
No public comment in Concord. There are currently no public in Concord.
Okay, would somebody like to move this item for approval?
So moved.
Second.
Moved by McCormick, second by Andre. All in favor, please say aye.
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 Actually,
Any
I think you do.
we have to roll call. Yep.
Belvedere,
Yes.
Lafayette,
Yes.
Larkspur,
Yes.
Napa County.
Yes.
Motion carries.
Perfect. That was unanimous. Moving to item 4, we have our report from our Chief Operating Officer.
Yeah. Well, can you hear me all?
Yeah.
Yes.
Thank you. Well, good morning, everyone. Good morning, committee members, the staff, and members of the public. Following the introduction at the last board meeting, we would like to welcome Alcides Hernandez to the Finance Committee as he has joined MC as the Director of Rates. He's in attendance. Alcides. Alcides is now fully integrated into the finance department, and we look forward to the expertise and the strategic perspective he brings to the team. The second amendment to the Royal Bank of Canada credit facility is now moving into final documentation with execution expected shortly. The key updates include a one-year extension of the facility with an increase from $60 million to $80 million. The finance team will be presenting departmental budget updates for fiscal year ending 2026 to all department heads at MCE. This is a quarterly process and is designed to reinforce strategic alignment, ensure resource transparency, and support informed decision-making across the organization within the guidelines of board-approved budget. Our CFO, Maida Strauss, has initiated outreach to all key financial stakeholders regarding the former CEO's departure, consistent with standard disclosure practices. Rating agencies, banking partners, and major financial vendors have been notified, and the CFO is in the process of scheduling individual discussions with each stakeholder. A few conversations have already taken place, with additional meetings planned over the coming days. Rating agencies have focused primarily on the timing of the leadership transition, the process, and criteria for selecting the new CEO, and have asked to be kept informed as the recruitment process progresses. They have not raised concerns regarding the former CEO's departure itself. Banking partners and other financial vendors have raised minimal questions and reported no issues related to credit, liquidity, or operational continuity. Financial vendors that were notified include S&P Global Ratings, Fitch Ratings, Goldman Sachs, Royal Bank of Canada, River City Bank, JP Morgan, Montague DeRose, and Maher Accounting. Initial responses have been constructive, and stakeholders have expressed appreciation for the proactive communication. And that concludes my report.
I'd like to second that proactive communication and appreciation for that and letting us know. Do we have any questions or comments for the uh, CEO? CEO? Yes, Sally.
Thanks, Liz. I had firstly taken a question about the quarterly reevaluation of staffing needs. That's not something I think that we've ever had before. Can you just expand on what that is?
I did not hear you well,
I'm
Director.
sorry. I was saying I don't. You mentioned that there's a sort of you're going to bring back a reevaluation of hiring needs within different departments. Did I understand that correctly?
No, I'm sorry. Maybe I misspoke. So every year, the finance department, as we are closing the previous fiscal year's budget to bring it to the board for approval, we do an internal review and study about what was spent for the previous fiscal year. This is fiscal year ending 2026, so it's fiscal year 25, 26, where we are and what we have spent and not spent. And we finalize that, finance department finalizes that so that we bring it for board approval. It's an internal process that I was sharing.
Okay. And then the other question I had, you mentioned a lot of different financial intermediaries there that you've had to inform in relation to the CEO's departure. I wasn't aware of a lot of those different relationships. Are those mostly in relation to prepay transactions, or, for example, Goldman, JP Morgan? Where's the relationship there? Is that just on the prepays?
Primarily prepay, yes. The Goldman, Montague, they're Goldman Sachs. Montague is like a law firm that reviews documents for us for the prepays, but you are correct.
Okay. All right. Thank you.
Sure. Any other questions?
Any here from our members, committee members? Do we have any public comment on this item?
I see no raised hands, Chair.
Thank you. Thank you for that report. Let's move on to item 5. This is the financial audit fiscal year ended in 2026. This is a status update, and there will be discussion following. And Maida, are you presenting this?
Yes, I am, Chair. Thank you.
Thank you.
Good morning, Finance Committee. Thanks for being here today. As the Chair mentioned, this is a quick audit status, and I will just gonna tell you where we stand with MCE's financial audit for fiscal year ending 2026. And before we get to this, I don't know if you noticed on the package, we changed a little bit how we write and talk about our fiscal year. We want to move on to fiscal year ending 2026, just to be more polished, instead of having dots and dashes in the middle of it, and just focusing on the year end. So moving forward, you see more of that in our documents. Going back to the audit officially kicked off in May, and the external team began their formal field work on May 26. At this point, everything is moving right on schedule, and the auditors have already completed a substantial portion of their planned procedures. During the field work, we provide a wide range of documentations, including payroll samples, SOC 2 reports for our data manager and payroll administrator. SOC report means the System and Organization Controls Report. We receive that from many vendors that we work with. And as well as sample energy contracts and bank statements with reconciliations. We also spend time walking the auditors through our energy procurement processes, settlement processes, and invoice validation workflows. And we are very thankful for our partnership with CB at Power Resources. The auditors have also completed their required SAS 99 interview with selected board members, including Chair of the Board, Scales Preston, Director Andre, and also Director Wilkinson. they select the chair, the members themselves, and we help them facilitate to schedule the meetings. We also coordinated a meeting between the auditors and Viken as the acting CEO for a size 99 interview. All testing so far are aligning with expectations, and we expect the draft financial statements in July, and we'll share that with the committee at the next meeting, plus an overall update of the audit. The remaining audit procedures will continue through July and August, and we are on track to deliver the final audited financial statements in September, keeping the same timeline as in all prior years. So I'm now going to open for questions and comments on the audit.
Thank you for that update and sharing the process for us all. Do we have any committee member questions?
No,
Not
pretty
seeing
straightforward.
any.
Thank you.
Okay, very good. Do we have any public comment?
It looks like Director Andre has her hand raised.
Oh, Director Andres, apologies.
Sorry, I didn't raise my hand using the button. Thank you, Maida, for that report and update on the audit. I just wanted to raise for this committee, when I was talking to the auditors, I did have a lot of questions about obviously internal controls and the, contract approval process and so forth. And so, I asked a lot of questions around the scope of the financial audit versus auditing, specific processes. And so I think, something for this committee to consider, I think is, within the scope of the financial audit, they don't necessarily always get in, they do audit sample contracts just to make sure that the contracts, the money flow lines up with what's happening, on that the invoices line up with the actual money flows out of our banking accounts. But a lot of the other, I would say, policy audits and process audits don't necessarily fall within the scope of the financial audit. And so, I bring this up because obviously we have some issues, and, for this committee to consider whether we want to, one, do an audit of our internal controls of the contract approval process and potentially of some of the personnel costs, because that's kind of where we had issues, with some of the personnel costs surrounding the CEO. So anyways, I bring that up for discussion, and see if this is something that we want to tackle later. Obviously, we're undergoing, multiple processes, and yeah, and we should just, up for discussion in terms of like, do we want to do this? And if so, like at what stage do we sequence all of these things that we're trying to do? Thank you.
I had a quick
Thank
question.
you.
Sorry, Chair.
Yes.
Do you,
Yeah.
sorry,
Go ahead. Amber.
is that something, is that a separate audit, or is it just expansion of the existing one we have? Because it feels like the financial audits I've seen, they do cover both, at least typically I've seen, seem like they cover both the controls and the financials, or what do you envision? Do you think is this a separate initiative, or just kind of expanding the scope of the current one?
Yeah, I think some things we could potentially just expand the scope of. I think if we were to want to go back and audit some of the previous stuff, that would probably be a separate audit.
Right.
So some of the things that, some of the controls, I think they will be auditing in this cycle. But if we wanted to go back and, for instance, look at some of the payroll stuff, or look at, some of the contract things going backwards, that would be a separate audit, is my understanding.
And if I can real quick, Member Wilkinson, you'll be next, but can I first get some more insight from staff, whether it be our acting CEO or our Director of Finance, Maida?
Sure, I'll be happy to do it.
Okay.
So we can have a separate audit that would be more of an internal controls audit that would go more in detail on those items that Director Andrea mentioned. But I'll just expand a little bit on my report. When I said, so the auditors asked for detailed information on the overpayment of salary and 401A. So we we got together with we partnered with HR on that one, and we have a detailed memo with all records, and we sent to the auditors, and they reviewed it and came back with questions, and they were satisfied by then. So we had to have a detailed memo of how did things happen, who did what, and what has been fixed from all of that. So this happened on the payroll side. They also ask for sample payroll records of selected staff. So they pick some staff randomly and they add senior staff to it. So we provide paycheck stubs, the COLA increases, all of that we provide to them to see it. The procurement. So the procurement and the contract, we partnered with CB at Power Resources, and we had a meeting with them. I would say probably a 45-minute with the auditors, and this is just the first one. And CB provided a lot of information, and as you could see from CB's workshop yesterday, he loves to write the sketches and go through it. So he did the same thing with the auditors, and the auditors are reviewing that to come back with additional questions, and they seemed satisfied. They asked for some procedures. How about improvement in this one? And we said we are working on improving this and that and that. So it's a conversation with them, and they don't let us easy. We give it to them and they say, "Oh, this is all good." No, we say we are improving this and we want to get to that. So this is kind of how the conversation go with the auditors for the financial audit. I hope that makes sense.
That makes great sense, and I really appreciate that. I think that answers a lot of questions for me, and that, but I'd like to hear from Member Wilkinson, and then we can finish this up.
Yeah, because I was going to add that my understanding after speaking with the auditor was that they would do a little bit of a deeper dive into some of these issues that we raised, which they clearly have. My question to Maida was, as the Finance Committee is now also the Audit Committee, we will be having a closed session with the auditors as they come towards a completion. And so I imagine during that closed session, we can ask questions about whether their recommendation is for additional analysis of any of the areas. And so, Stephanie, I think that's the time that we can maybe discuss whether additional analyses or audits are helpful.
Yes, sure.
Okay, thank you.
Yes, Vicken?
Yeah, this is really great discussion. I just want to add that, as you may recall, the existing auditor's contract is ending this time. And we had reported that we will be issuing an RFP for moving forward for as many years as the committee would recommend. And we can definitely consider that time to augment or adjust the task at hand as to what it is that we would like to dive into. So just as a reminder.
Thank you for that
Sure.
reminder. Okay, so do we have any public comment?
We have member of the public Alicia Minion.
You have 3 minutes. Please go ahead.
Great. Can you hear me?
We can. Thank you.
Okay, great. Okay, on the last item, I actually had a public comment on that, but I couldn't figure out through the phone how to unmute or raise my hand. So I have a few questions. Number one, with regard to Morgan Stanley and Goldman Sachs typically being the funding recipient on the prepaid energy bonds, I was wondering if MCE Legal has assessed any potential conflicts of interest under California Government Code Section 1090. Since Goldman and Morgan Stanley are also the bond underwriter, they might be the funding recipient. I'm not sure what role they play in the swaps on these deals. And I was just curious if that's been assessed. Additionally, in reviewing the draft financials and some of the slides, I was wondering under the operating expenses, cost of electricity, with regard to recs, and even though they might be a bundled rec, I was curious why um, the cost or the value of the rec is not separately recognized on a separate line item. When reading the audit report for the prior period, it indicated that, the reason for the increased cost in of electricity was due to regs, but it didn't, quantify it. And it just seems like it's a different animal. It should be separately recognized. Additionally, the discount that you're supposed to be receiving in connection with the prepaid bonds, I was wondering, how is that recognized? Because I don't understand the mechanics of the discount and how that works. And so is it simply an offset against the cost of the energy? Is it supposed to be, because these are prepaid bonds, is it supposed to be a capitalized, prepaid asset? And so I'm curious about that. And then lastly, on the discussion about internal controls, I think it would be great to engage the auditor to do a deep dive on internal controls over, any particular line item in the financial statements that needs more clarity or more, just to make sure that those high risk areas, that there's sufficient controls to ensure there's not a misstatement in the financial statements. And that's all I have for now. Thank you.
Okay, well, you covered a lot. I think you covered 3 agenda items.
Yeah, I'm sorry.
To be
I know.
frank. So we're on one right now, right? But I went ahead and let you just you know complete your comments on all those. So thank you, Alicia, for that. Do we have any other public comment?
I see no additional hands.
Okay, very good. We heard you, Alicia, and thank you for your questions. Okay, there's no other public comment. Let's see where we are with this. This is just for discussion. This was not an action item. So on that, I think we can move forward. Okay, so the next
If I may,
yes,
I would like just to discuss a little bit about the Goldman Sachs involvement.
sure.
And
Yep,
I would like Afrin Okshala, Manager of Finance, to give us just a brief on the Goldman Sachs side of
very
it.
good. Okay, thank you, Maida.
Yeah, thanks, Maida, and thank you for the question, Ms. Minion. So the recipient for the 2021 and 2023 deals was Goldman, but not for the 2025 deal. And in terms of the swaps, they're dormant in all the 3 deals, so that's not something that we currently have to deal with. And in terms of the savings, you are correct. It does directly offset the cost of energy. So another way of saying that is if we didn't have those savings, we would see the cost of energy that we're about to show being higher by about, I want to say more than $11 million. So that's how those savings show up, and we can, provide more information if needed.
Okay, thank you, Efren. I see we have a couple hands. Let's go with our senior legal counsel real quick. Make sure we're in line. We're not doing anything outside of our protocol here.
Absolutely. I just wanted to briefly note that Government Code 1090 addresses conflicts of interests by public officials and employees. So whether members of the board have any of conflicts of interest, whether staff have any conflicts of interest in when we're sort of, making decisions about contracts with Goldman. So we all have our Form 700s, and that's the way we address those issues. And I don't know how to lower my hand, so I should have used the manual one. I'm sorry.
No, that's good. There you go. Okay, thank you. Thank you for providing that reassurance, and that's absolutely true. Yes, Member Wilkinson. Oh, you're muted.
Sorry, a couple of follow-up questions there, Efron. Where you mentioned there's 11 million of savings there, it would be really helpful to see at some point for the different issues that have been issued, what the board was told would be the savings versus what we're actually seeing in terms of the savings for each of those bond issues, just so that we can see how this is panning out. And then the second question I had, when will the first of those issues refinance? Because that's coming up soon-ish, is it? I don't remember what the initial expectation was.
Yeah, so we can actually provide that information in terms of the savings and how it shows up in the general ledger, Director Wilkinson, so we can do that. The 2021A deal is due for repricing in early 2027, so towards the end of 2026, we will be starting that process.
Okay, and can we at that point choose to exit that deal?
I think there are certain language that might limit us, but if the certain savings do not meet a certain threshold, which I think is 5%, then yes, we do have the option to exit the structure.
So we are, because we were always told when these bonds were issued that if we didn't want our prepays, if we didn't want our PPAs in them, they would just put in some different PPAs from another CCA. You're saying that's not correct, and if we wanted to exit these deals on the refinancing, we're not able to?
I would have to check with our advisor, Director Wilkinson, but I can tell you that there is a minimum savings threshold that we have to reach, and if we don't reach it, MCE does have the option to exit. Okay,
because I think if this is coming up in early 2027, this is definitely an issue that we should discuss at length in the Finance Committee, because I certainly have major reservations around these transactions in terms of how they serve the public good. And so I think we really would want to see the financial benefits to the agency versus what we were promised when they were initially priced. And just considering the impact on all municipalities of having non-municipalities issuing effectively in the municipal bond market and what that does to pricing for everybody else. So I think we should bring this back as a serious discussion to the Finance Committee before that refinancing happens, and certainly before any new transactions are considered.
Thank you, Member Wilkinson. So if we schedule a future agenda item, what are we going to call this item?
It could be prepay repricing, or prepay considerations. Electricity prepay considerations.
Prepaid considerations, I'm sorry.
Electricity prepay considerations.
Okay. If I don't know if that would be Jessica, but if somebody can note that for that to come back at an appropriate time, that would be great.
And if that's going to come back, it would be good to chat beforehand about some of the data and analysis that would be useful in that context.
Sure, we'll do that. Thank you.
Okay. Let's see. Are we ready to move on to the next item? Is questions and discussion complete? I see. Okay, very good. Let's move on to the next item, which is item 6. This is the interim financial statement fiscal year ended 2026. And this is also a discussion.
Perfect. Thank you. So shifting gears a little bit, let's talk about interim financial statement. And for this item, we have a short presentation, and then I will open up from questions on the presentation as well as on the statements that have been provided to you in the packet. Next slide, please. So what you have in your packet are our preliminary unaudited results. Some balances may shift slightly as additional information comes in, but they give us a solid year picture of where we landed for the year. This presentation is meant to give you a clear sense of performance for the year, but it's not the same as the budget reports. We will bring a budget report recap later in the year to walk you through the variances and any drivers behind them. So here we're about solely the financial statement. Next slide, please. Thank you. So here you see the trend in net position over the past 6 fiscal years. Our cumulative net position continued to grow, reaching about 499 million at the end of fiscal year end 2026. That reflects a change in net position of roughly 82 million for the year. You will also notice that the deferred revenue amounts noted for prior years, 15 million, 4.5 million, and 40 million. These are the transfer to the operating reserve fund that the board approved in earlier years. For 26, the figures shown here assume no ORF transfer because we are going to discuss that in the next item. So here we have the full change in net position before any deferral. For next slide, I'm going to pass it to Efren to go deeper into the statements.
Great. Thank you, Maida. So now looking at the income statement and starting from the top, total operating revenues for fiscal year ended 2026 were about $782 million. That is a decrease of $34 million or 4% year over year. And this is primarily due to the mild summer weather that MCE's service area experienced in 2025, which resulted in lower sales. Going down to operating expenses, we have the biggest one of them all, which is the cost of electricity. This item totaled $652 million, representing a decrease of $116 million or 15% from the previous fiscal year. And this is really the main driver of the results shown further down in the table. The reasons for the lower cost of electricity include the timing of when MCE received certain renewable energy deliveries, which caused those expenses to be incurred in the previous fiscal year, specifically fiscal year ended 2025. We also saw lower net CAISO costs due to the mild summer weather, and generally prices were lower in fiscal year ended 2026 than they were in 2025. Other expenses such as contract services and staff compensation were higher year over year, which is consistent with the board approved budget that was in place for the fiscal year. However, the decline in the cost of electricity did move MCE from an operating loss of about $12 million in fiscal year ended 2025 to an operating income of nearly $61 million in fiscal year 2026. Once we add investment, that brings the total change in net position to about $82.2 million, which brings the total net position to $499 million. And as Maeda mentioned, and I think we really want to emphasize this, the numbers that you see here assume no transfers to the operating reserve fund. And should your board authorize a transfer, the change in net position as well as the total net position would decrease by the authorized amount. Next slide, please. Okay, so moving away from the income statement to the balance sheet, this provides a snapshot of MCE's assets and liabilities as of March 31st, 2026. As of this date, MCE's assets totaled about $661 million. The largest components here include MCE's investments at roughly $253 million, followed by unrestricted cash at about $242 million, with accounts receivable and accrued revenue at around $98 million. The other category in the assets section captures restricted cash, primarily tied to grants as well as security requirements, plus a number of small items such as deposits and capital assets. Okay, so moving down to liabilities. Liabilities totaled about $92 million. The largest component here is the accrued cost of electricity, which was roughly $59 million. Grant money that has not yet been spent is the second main component, followed by other accrued liabilities, which mainly reflects payroll-related obligations, and those are actually spelled out below the table if you're curious. We also carry, of course, $70 million in deferred inflows, which represent prior transfers into the operating reserve fund. So that leaves the total net position at the 499 million figure, which we saw in the previous slide. And again, should your board authorize an ORF transfer, we would see an increase in the deferred inflows or resources line and a decrease in the total net position. Next slide. Okay, so finally we have liquidity, and as is common practice, we measure days liquidity on hand using unrestricted cash plus investments. At fiscal year end, MCE held about $495 million in liquidity, which translates to about 250 days cash on hand against our target of 240 days. So we did close the year slightly above the target, but as I think most of us know, that the target is one that moves with our total expenses and total revenue, and we do expect the number of days to decrease in the current fiscal year due to the rate reduction as well as the temporary rate credit that is currently being offered to our customers. So with that, we will end here and open it up for questions and discussions. Thank you.
Efren, before that, just one second, please, that I would like to bring something up. So Director Wilkinson sent Vicky and I a great email with a suggestion of using the metric of only the days cash on hand for our reserve policy. And I would like to also open that for discussion, and then we can have this scheduled for next committee or about this change for the next committee meeting. So Director Wilkinson, also please feel free if you want to talk more about your idea of simplifying our reserve policy by looking at, I think this slide would be a good start of visual to talk about that idea. Thank you.
Okay, thank you. I saw that we have, I don't know if Member Wilkinson, let's go ahead and we can drop the slide so I can see the entire group unless we need or request to bring the slide back up. Thank you. So I see that Member McCormick has a comment or question.
Yeah, excellent. And thank you very much for the report. Obviously, this year is looking a little, this fiscal year looked a little nicer than the previous fiscal year. I just wanted to drill in a little bit on our cost of electricity going down. Is that, because obviously it's a pretty significant decrease year. Was that just due to lower demand because of the cool summer? Or was anything, do we have new forms of contracts that were kind of in there? Because obviously we were kind of struggling with some high cost of contracts before. Are we being more efficient with our contracts and just what we're doing, or is it strictly just lower demand? Is that what accounts for the lower cost?
Thank you for bringing this up, Director McCormick. So I am going to call Kalader from the procurement team to speak in detail about this question.
Thank you, Mayra. Thanks for the question, Director McCormick. It's kind of two elements going on. You can see demand going down, mild summer, but also the prices, which is a function of there is excess supply in the market, but demand going down, the prices kind of trended lower too. So those two elements kind of factored in, keeping our cost of energy lower.
Okay, so it's really strictly demand side then, kind of the lower demand
side,
because that does both sides, right? The lower we're procuring less and it's cheaper.
Exactly, you got it.
All right. And do we have any? I don't know, not to move forward, but our current weather projections are for cooler summer again this year, right? Is that, if I remember correctly? We had a report a couple months ago, I think, at the board meeting about that, because you must have that must be a strong part of your projection, is because the summer weather has such a big factor in our finances.
Yeah, sorry, Cal, let me take a shot at that. Director McCormick, when several months ago when we were working on the budget for this fiscal year, what we conveyed that we did not consider in the budget a high heat element for this summer.
That's right.
because the minute we assume something like that, our costs will go up because we need to assume higher cost, higher demand. Because like 3 years ago, 1 week or so cost us more than $20 million inside the
Right.
CAISO. So we were a little bit more conservative on the norm, and we did not include extremes in the budget year we are in.
Okay, that's right. That's right. I was no less familiar with that. It was just
Yeah.
brought attention.
Hopefully that will be a reality.
Hopefully.
Yeah.
All right. Thank you. I'll let
Probably
others.
just want to add that I think it's trending higher, like we call it Super El Nino. I think the latest forecast shows Super El Nino coming, which may be the summers may be hotter than what we forecasted earlier. So just to add what we can.
Thank
you. Thank you very much. Member Wilkinson.
Thank you. Cal, just following up on John's questions there about the drivers of this reduction in energy costs. I know it isn't necessary for the financial statements, but I think showing what actually happened in relation to the Super Six, as we call it, would be really helpful, because my understanding is that most of that reduction is just because of the dramatically less amount of money spent on Index Plus and some timing issues. So I think just for our sort of educational purposes, not for the financial statements necessarily, but it would be really useful to see that breakdown so that we have a better understanding of what was sort of, I don't want to say optional, but was policy driven as opposed to market driven, so that helps inform our decision making going forwards. So I think that would be really helpful for next time. I know it's not needed for the financial statements. Maida, I'm happy to talk about the question of reserve policy, but do you want to run through the next section on the operating reserve fund first? Because I think that provides context as well.
Sure, I'll do that. And about the budget, Director Wilkinson, the Super Six we will include in the budget review time. I mean, not the budget review, probably next 1 or 2 meetings when the financial statements are closed.
Okay. It's mostly just for us as we think forward to look at what the patterns have been historically as we're making some of those policy decisions.
Yes.
So.
Well, absolutely, 100%.
Okay, thank you.
Thank you, Member Wilkinson. Member Andre.
Thank you. Yeah, I mean, on the Super Six, I would like to just see it on a more regular basis. So if it's a quarterly, whatever the cadence is, it would be helpful just to see the breakdown on a regular basis. That way we can, as a board and a committee, we can track what's happening with our energy costs. I mean, that is the largest, line item in our financial statements. I had a question, and I don't know if we want to get into this right now, but when I'm looking at, on the side where we show the balance sheet, it would also be helpful to see the prior year's balance sheet next to this year's balance sheet. That way we can track what the changes are. Similar to what you did on the income statement, if you could do the same for the balance sheet, that would be helpful. I did have a question on staff compensation. We ended the year at 28.4 million, and that's a 15% increase over fiscal year 2025. I think our budget for fiscal year 27 is 28.6 million. So are we going to be at risk of busting through our budget for this next fiscal year? I mean, how does this 28.5 million compare to our actual budget?
Yeah, I can take that question, Director Andre. So what you see here is, so the budget that you approve is shown net of reimbursements from grants. So it is typically lower than, the actual cost, right? Whereas the financials, that distinction is not made. So you're looking at the total cost here, not inclusive of any reimbursement like grants. I think when we look at the actuals on a pure budget basis, so looking at those costs net of reimbursements, we're actually, I want to say, right at the budget, maybe slightly up by about 0.5%. And so we'll have that information shown at the upcoming budget recap, where we'll have a budget variance analysis for all the line items.
So are we Are we exceeding budget or not, I guess is my question.
For the current fiscal year?
Yes.
I don't have insights into that just yet, Director Andre. So I wouldn't know what to tell you.
No, I'm sorry. So for the fiscal year ended 2026, the numbers that we're looking at right now.
Mhm.
So you're saying the 28.5 million is inclusive or exclusive of the grant funding?
It's inclusive of grant funding.
It includes grant funding.
Correct.
But when we look at the budget numbers, you're saying they're not, because you do present the budget numbers two different ways. And so I thought
Mhm.
when we were looking at the budget for next fiscal year, when we approved it, the number without grant funding was like 32 million, but
Right.
the number with the grant funding was like 28.5 or something, or 28.6 in that neighborhood.
Yeah, we don't have the numbers just yet for the current fiscal year to give you a good answer, but at least for fiscal year ended 2026, I think we were slightly up by about 0.5%, but that is before tapping into the contingency. In general, operating expenses were below budget.
Okay. All right. That's helpful. Thank you. And then when I'm looking at the accrued cost of electricity, the 58 million, compared to last year, again, the balance sheet from last year, but last year we had it was like $170 million of accrued cost of electricity. How do we manage the payments of our contracts? How much what's the policy there?
So I can start with that too, Director Andre. So that balance for fiscal year into 2025 was particularly high.
Mm-hmm.
At that time, we knew about the early deliveries, so we had to accrue for the liability, but we had not yet received the invoice. So, we had not yet paid it, right? So that explains that huge liability that you see there. In terms of payment, we typically first receive the energy and then we pay in arrears. So typically, for energy that we received in June, for instance, the invoice would come at the end of or towards the beginning of July, and then we would pay the invoice later in the month.
Okay, so last year was the anomaly because of the large contract that came through at the end of the year.
That's right, yeah. So we knew about the deliveries, but we had not yet received the invoice, and so the liability was particularly high.
Mm-hmm.
Once we paid it, it went down to a level more consistent with what you're seeing here.
Okay, great, thank you.
Yeah, and that's consistent what you shared in past too. Thank you. Thank you for that. Member McCormick.
Great, thank you. Yeah, I was just inspired by something that Dr. Andre said, and I just want to kind of follow up. I think I just know for both our city as well as I was in the corporate world, I'm wondering if when we saw the income statement where we've got the previous year and current year, having the budget next to that so we can kind of see how it goes. 'Cause I think those are both valuable aspects. One is, year to year change, which is good, it was super helpful, but then also how we operate against budget. I think because then that would kind of give us, and then obviously if we have an extra large variance one way or the other, that would help give us some insight what to drill in on, because it's hard to tell just with raw numbers whether it's good or bad. So, not to add too much work, and this is more how often we do that, but I think that would be an incredibly interesting thing to see. To really have those three the three things, whether that's not in this particular instance where we're just looking at I know right now we're just kind of like, this is our first chance to look at the numbers, so maybe not everything is done yet, but eventually having that comparison would be great, and I think would address some of Director Andre's questions as well.
Yes, we have hands up by our acting CEO, and then our CFO.
Thank you, Director. I just want to say that when we bring the closure of the past fiscal year, we will definitely do what Director Andre and Director McCormick you said about comparison. The other thing, Director Andre and the whole committee, I cannot emphasize enough how seriously I am taking the statement, Director Andre, about going over budget. That is a proof that if we don't want to, we shouldn't. And if we absolutely have to, we will bring a consideration for a budget amendment for every single line item. There's a lot of work we do. Linda, Maida, the whole finance team, we're making sure that we complete, review, and apply all the appropriate board guidance and policies about what can be done when and what have you. So I just want to assure you that it's very serious, the statement that you made, and we will not do that. We will bring it for committee's consideration before we take it to the board for a budget amendment before we spend another dollar. I cannot emphasize enough. I just wanted to say it. That's it.
Thank you for your commitment to that and sharing
you.
that with us. Our CFO, Maida,
Thank
that is your title, right? Is it CFO?
Yes, it is.
Thank you. Okay.
So I want to address just a couple items here. Well, there will be three items. So first of all, I just want the committee to understand a little bit how things work on the back end. So a few days before the due date of putting this packet together, we were able to close the preliminary statements. So we act as quick as possible to get those documents to you to do the presentation and put them in the packet. So this was done with like very, very, very tight schedule with everything else that's going on at MCE. So that's why we are presenting the interim financial statements now. As I mentioned before, as time progresses and we get more information and refine the financial statements, we will bring also the budget for comparison, but that takes more time. We need to have the numbers more refined, number one, and number two, we have a lot of back end work to do, which is contact all department heads and analyze how the budget, how did this spending and that spending under and so on happen. Then we can present this to you all. So this is just what happened in the back end. So I wanted to just explain a little bit of that. Number one. Number two is that for the procurement, our cost of energy line, the Super 6. So we do have that preliminary numbers again on every quarterly treasurer's report. So every quarter we have the Super 6 lined up with the budget and the percentage on the treasurer's report. And that now that we have the finance committee, I always bring that to discussion with you all. And thirdly, while we are talking, I asked Zina Meyer, our finance analyst, to pull up the budget quickly, the preliminary budget that we have on staffing. So, and I wanted to report out so we don't have to worry about. Incredibly, the after the discounts, the 28, it became to 25.4. So basically the percentage of change is 0.3%, not change, percentage actual versus budget is 0.3%. So we were spot on. There's no need for transfer or anything. And also to clarify that the 28, we do have there the amount, it's pre-discount from grants. So it was 28. When we applied the grants, it became 24.5. And the budgeted amount was 25.4. So that's about a 0.3% below budget. So I just want to clarify that. And thank you, Zina, for pulling those numbers so fast for me on my other screen over here.
Excellent teamwork as usual. And thank you for addressing all those points, Maida. Member Wilkinson, and I just want to do a time check. I think we have until it's almost 11 now. We've got, let's see, this is on item 6. I know the next one's going to be a bit of a discussion. We're scheduled to be here till 11:30. Is that correct? Okay, very good. Just want to be mindful of time. Member Wilkinson?
Thanks. I have a super quick question for Vicken. I know right now we don't actually have any official policies on budget and budget amendments. Is that something that staff is working on bringing to the board so that we understand exactly what the rules are in relation to that?
I believe we do. We have guidelines from several years ago as to what line items we can do what with it. But I can give it a shot to Linda because she was digging quite a bit into all these things. So Linda, you want to respond to that?
Sure. I'm not familiar at this juncture with specific guidelines or policies, but I think we're looking archivally to some of our prior practices on when the team came forward with budget amendments. And so in general, the teams, leading finance, obviously leading the efforts, but a collaborative effort to, move towards providing the board with obviously Maida's team has been leading in presentations to the finance committee, sort of the interim updates on where we stand, and then we can come forward with mid-year adjustments as needed.
Yeah.
But I do
Thank
think
you, Linda.
but I think it makes
sorry.
sense to have an officially adopted policy. I mean, it's all well that you have practices, but as things change and people don't remember those practices, that isn't ideal. And so there should be some formal policies put in place.
Yeah.
We can certainly, obviously would take the direction from the board on this. And I think in the spirit of like trying to tee up the various priorities, we definitely want to be able to come forward with you with the mid-year budget adjustments. And then we can certainly have a discussion about, if there are guardrails around like, what's the trigger, what's the timing, would just respectfully request that we can have an iterative conversation as we get our practices in place.
Okay, that makes sense. Thank you.
Thank you, Linda. And just to, I'm sorry, Director Alicia, I'm just going to share this because it became recently a little bit of an issue that we will need to bring for a change on how to do these budget line items into the future, like something similar that CB mentioned in one of his last pages. Flexibility is going to be, as explained thoroughly, is going to be crucial for us to go through the maze of energy and expenses. Right now, I have a budget line item that that is not doing well in customer programs, that it's minutia. It's like $30,000, that it would be much better used in another program. But the rules do not allow me to do that. And therefore, I will need to wait to bring to a budget amendment, which takes a pretty long time to do that down the road, if this year, if possible. So this would be one type of flexibility that it would be good for the agency to have within guardrails, with an explanation, what have you, on what we can do within a budget. So we're thinking about those things and we'll bring it for your consideration.
Okay. You hear me typing? I'm like taking all these notes. So hopefully my typing is not distracting everybody. Okay, so I think we're good on this item. I don't recall if I asked for public comment on this. I think I did, and then we came back to board discussion. But if somebody could verify that I did ask for public comment, that would be really helpful.
I believe we did public comment on the previous item. We have not done public comment on item 6. So there are a few hands raised. So
okay, let's do public comment then. Thank you. And just be mindful, it's 11 a.m.
We have Alicia Minion, followed by Jody Timms and Dan Segedin.
Okay, thank you. Ms. Minion.
Hi, great, thank you. Okay, a couple comments. With regard to the difference in energy costs being attributable to a reduction in index plus contracts and the timing issues, I think that's a good discussion for the MD&A portion of the audit. Also, with regard to and this is just really for the audit, I appreciate all the the numbers that were provided today, but maybe eventually, maybe we could discuss what should be disclosed in the audit report and the notes to the financial statements. And I don't remember seeing any discussion regarding the discount associated with the prepaid energy bonds. And I think that at a minimum should be disclosed, because I think that is material, at least, again, should be disclosed. And then, especially in light of the fact, like in the most recent prepay that was approved, I think in June of 2025, there was a press release by MCE that said, oh, you know, we are estimating a $65 million savings on that particular deal. And so I'm glad you're going to be discussing this at another meeting with regard to the prepays. And then also I want to thank legal for answering my question on the conflicts of interest, section 1090. It is my understanding that section 1090 also applies to a government agency's consultants, service providers. In fact, they should also be completing the form 700. And there's lots of case law on this. And I think, you know, when they're looking at conflicts of interest with regard to the prepay energy bonds, you have to look at their CCCFA in terms of, is there conflicts there? So, you know, for example, you know, again, back to my original question, can the underwriter also be the funding recipient, also be a counterparty in a swap? And I'm not saying that's the case. I mean, these are the kind of things, because if that particular hired service provider has a financial interest in the bond transaction or another subsequent transaction related to that, they may not be able to do it. Again, it's facts and circumstances. And then also, we, at the time of the issuances for those 3 deals that the MCE board approved, there were employees of MCE that are also serving a role on CCCFA. So that's just something else to think about. Thank you.
Thank you. Great job on the timing. You had like 3 seconds to spare.
Thank you.
Next, public comment, please.
Jody Timms.
You may start anytime, Ms. Timms.
Yes. Good morning. I just have a very short and general comment, and one that I shared with staff around community programs. When 2 fiscal years are presented on a slide like the income statement, if it's possible to just add a column with a percentage of difference or variance, that would just be helpful for those of us who are just kind of trying to get a sense of things. How did this year compare to last year with a percentage? I know they were all mentioned, but visually it's just a mathematical calculation, and it's helpful. So thank you.
Thank you. I second that. I do also like seeing the variance in the percentages when I look at finances. And next, public comment.
Dan Segedin.
Please move ahead. Dan, anytime.
Good afternoon. I guess, yeah. Good morning. I just wanted to thank the CFO for their commitment to show the Super 6. I think it builds nicely on the work that Vicken has started with these workshops on education, and that staff is supporting. So they're very different components, obviously, with very different policy implications for the board. So I think they're absolutely crucial to break out. And I just want to say, if you could clarify the treasurer's report, I thought was monthly. Does that mean we'll get those monthly? But I thought I heard you say, well, they'll be quarterly that we report that. So if you could clarify that, that would be great. And then the other quick comment is on the balance sheet. Would love to see, 2 columns, the previous balance sheet and then the new balance sheet, so you can see the change. And you could add a column with the dollar change. Thank you very much.
Thank you very much, Mr. Segedin. I do believe the treasurer's report is quarterly, but can staff clarify that for me real quick?
Sure, Director Alessio. So we're talking about 2 different and complementary things. So we do have treasurer's report going out every month, and that is the monthly report. And then every quarter, we included in the monthly report, we have a quarterly report. And then on the quarterly is where we have all those dashboards, 3 pages of dashboards, including the Super 6. So it's the more detail. And the one coming up is the annual report. It's going to be the annual report, which is in sense a quarterly report with some different attestation that we have to include.
Thank you so much. That all sounds very familiar. Great. Do we have any other public comment?
I see Dan's hand up again. I don't know if you want to take another comment from him.
Dan, do you have more to say or more to comment on?
No, sorry. I appreciate the explanation. That was a mistake. I didn't lower my hand. Thank you.
Okay. All right. Thank you.
No additional hands, Chair.
Okay, excellent. I do believe this is going back. This is a discussion item, so there's no action here. Looks like we're ready to move on to item 7, which is a discussion and action to follow. This is a proposed exception of operating reserve fund policy cap and transfer. So we can go ahead and move on with the presentation on this.
Great, thank you. So for this item, I would like to walk you through regarding the proposed exception to our operating reserve fund policy. So we included in the packet the policy itself to help members understand what we were asking to do. And also, addition to that, we have a reserve and liquidity policy. So a little bit of history on that. The reserve and liquidity policy was built on way before the operating reserve, and it was built on before actually we got our first investment grade credit rating, and that's when we put that in place, I believe 2018. So that's when we put in the reserve and liquidity policy. And then after that, I believe 2019, we came with the operating reserve fund. That's the one that we originally want to talk about in this item. That is the action item for this item here. So I hope this helps clarify which one is which. And please ask me more details as we go down the line to make sure we are on the same page. So with the operating reserve fund, the second policy I talk about that was built in 2019, it's the ability to defer revenue in strong financial years and then recognize it later when financial performance is not so strong. And every transfer in and out requires board approval. So this is what part of this item is today. So for fiscal year ending 2026, our interim audited results that we just talked about it show revenues about 800 million, with a change in net position of roughly 82 million. Given that strong performance, staff is recommending that we defer 80 million of those revenues into the ORF. This would preserve financial flexibility and help support rate stability in the years ahead, as we just saw last year. What happened last year. So now here's where the timing issues come. As part of the adopted fiscal year end 2027 budget, we are planning the one that we are in right now. We are planning 62 million withdrawal from the ORF to support the 14% rate reduction that took effect in April of this year, as well as the temporary rate credit through April through December. So because of that withdrawal that happens technically later in the fiscal year, the ORF balance would temporarily rise to 150 million before it comes back down. So under our current policy, the ORF is capped at 10% of total revenues. That would be 80 million. So the temporary increase to 150 million would exceed that cap. So that's why we're bringing forward a one-time exception to the policy to allow the transfer to occur now, with the understanding that the balance will fall back towards the cap once the planned withdrawal happens. For context, looking to even at 150 million, our ORF would be on the higher end comparing to peer CCAs. We look into all of the larger CCAs balance to come up with this, but we're also not the highest, even at 150 million. And again, this would be temporary, right? So from a financial statement perspective, deferring the 80 million would reduce the reported change to a net position of about 2.2 million for last fiscal year. We also would like to welcome the committee to consider whether any remaining funds from the year-end net position should be directed towards customer programs later this year when we do the budget amendment that we have been start talking about it. And also, I would like to bring again the consideration that Director Wilkinson, I want to give her some time to talk about that, because I think I think it's a great suggestion that amendment to the reserve policy. You would simplify by solely focus on days cash on hand. And if it helps, we can bring back that slide with the days cash on hand. I think that would be a way to leave things simpler, easier for the board and the public to understand our policies and where we are coming from. So the recommendation is first that the committee recommend to the board approve of a temporary waiver of the ORF policy cap. And second, recommend approval of the 80 million deferral from fiscal year end 2026 revenue into the ORF. Those are the actual action items, and the other items are discussion items. So I'm open for discussion, and I'm happy to walk you through any additional detail. Thank you.
Thank you for that. And the staff report was excellent. It described all that. So if anybody has questions, want to look at the comparisons, please reference back to the staff report. And I'm talking more to the general public. Member Wilkinson, why don't you start this off since you started earlier? And then we'll go to Member McCormick.
I don't really have a lot of questions, so I don't know whether you want to just take comment now or whether, is that okay, Liz?
Sure.
Okay.
Yeah.
So,
Please.
so
Thank you for asking.
I fully support the recommendations. I mean, the ORF is essentially just a smoothing technique, and I don't see any issues at all with increasing the cap or deferring that 80 million. I'm happy that you agree, Maida, in terms of the change to the reserve policy, because I know even for me, who's very used to looking at financial statements and terms and everything else, I have to scratch my head a little bit to see the differences in the purpose of these two things, because the introduction of the ORF really sort of distorts the net position figure because it's separated out, and so it just is a not very useful metric. I don't think it's relevant for rating agencies, and I think it confuses board members. And at the end of the day, we all want to know how long we can keep operating for in difficult conditions, and that's days cash on hand. So I think I would certainly support changing the reserve policy just to focus on days cash on hand. But I think if we do that at the same time, we should also do an assessment of whether that 240 days is the appropriate level. I haven't done any. I have no idea at all on whether that is appropriate or not vis-a-vis other CCAs, but also vis-a-vis what the rating agencies want to see in terms of liquidity vis-a-vis specific credit ratings. And I know that's a little bit of a complicated exercise, but I think there's some work that could be done there. And it might be that the target that we have right now is entirely appropriate. I have no idea. So I think if we're going to revise the policy, we should at the same time assess whether that 240 days is the appropriate ceiling.
I absolutely agree. I was thinking the same thing, but I'll share my thoughts after Member McCormick. Oh, you're unmuted, Mr. Cooper.
Yep. So no, actually, I think that it makes a lot of sense, and this seems just a little more of just an accounting thing because of the timing. My question was where there is a $70 million policy cap on that thing that we have to have an exception for. Is that even the right number? I mean, I was looking at your peer competition. It's like, well, maybe that number should actually be raised as a general rule anyway. Just because, I mean, obviously, even just for inflation and cost increases, we're just probably at a higher level overall than when that 70 million number was originally put in there. So maybe it makes sense to kind of give a little more, a little more headroom, just so it wouldn't be quite so, wouldn't cause any concerns because it's just kind of the normal way we're doing things. That's really my only comment, and I certainly support Director Wilkinson. It sounds like we all are, simplifying, the days on hand is sounds like it's really the metric we all care about. And I think, we've spent the meeting asking for new stuff. And so I'm also quite happy to get rid of things that don't really add value, right? Because we really want to, I think, continually focus on the stuff that does make sense and get rid of the stuff that is redundant or doesn't really help explain things. That's all I got. Thank you.
Excellent. Thank you. Member Andre, anything you want to share before I share my thoughts?
I agree with all the comments that have been made. Thank you.
Okay, very good. Yeah, I actually think that, and again, I think that what's brought up in looking at the policy change, this is a good time to look at doing that. And just for transparency reasons. And also to me, looking at where we stand with the other CCAs and looking at knowing that it's just a 10% policy to our reserves, to me, frankly, looks really low. In terms of different agencies and government agencies, generally your reserves runs between 16 and 18%, at least for Napa County and the city of Napa I can speak of. I don't know about other jurisdictions. And if that was the case, it would be at 16%. We would have our cap would be 128 million. And if it was at 18%, it'd be 144 million, which kind of feels more in line. I just want to make sure that MCE does have that flexibility. And whether it's the smoothing out or just knowing that they have more cash on hand in terms of potential volatility. But doing a full exploration and seeing what those other percentages are based on the number of ratepayers, I think would be worthwhile, a worthwhile presentation and look by this committee. Looks like I generated a few hands. So we'll go back to Member Wilkinson and then we'll go to our General Counsel, Linda Light, unless Linda, you want to say something? If I fouled in any way?
No, not at all.
Okay.
I appreciate the promotion, but senior legal counsel. Catalina's on vacation today. So just I wanted to draw everyone's attention, just brief sort of Brown Act reminder that the specific item that has been agendized is the proposal and staff recommendation for an exception to the reserve policy, I think is a natural outgrowth of the discussion in which the item agendized is an exception to the policy or sort of understandable questions about the policy and the various metrics in the policy and whether at a future meeting we should be getting into presenting a robust staff presentation and inviting committee input on the policy and the various metrics we're using, both the days on hand and then also what the level should be. So what I would just respectfully request is that when the committee moves towards action, it focus on the agendized item and the recommendation. But would it be a fair recap for staff to take away the committee's direction to be that staff come back with a robust discussion item on the various aspects of the policy, including whether we should continue move to a cash on hand, and then also various guideposts for what an intelligent level of cash on hand would be.
Correct. And I'm sorry if that was misinterpreted, that we were trying to change policy here and now or agendize anything. But I think the discussion is really looking at the opportunities ahead. And clearly we'd want to have a future agenda item on that. Member Wilkinson. Oh, you're muted.
Sorry, I was afraid there was some confusion there in terms of the amount of reserves we have, because the 10% number is just relating to the operating reserve fund. Our actual reserves are over 6 months. We've got more than 240 days. So
thank you for that clarification.
Okay, thanks.
I appreciate that. Thank you. Yes, our acting CEO.
Yeah,
Second.
thank you so much. I just want to thank you for the discussion. The fundamental reason of this is for us to look about a year ahead and to be ready for it with a tool. The operating reserve fund is a really great tool that we have to be like a shock absorber for whatever that we may be facing, and we could be facing more stuff. So anyway, thank you and really appreciate the discussion and for the upcoming discussions. That's it.
Thank you very much. We're all of a sudden time is catching up on us. Let's ask for a public comment on this, and then we can move to board action.
I see no raised hands, Chair.
Perfect. Okay. Do we have anybody that would like to make a motion? A
I'll make a
recommendation?
motion.
Okay. So
I'll
the
make a recommendation, or I'll make a motion that the Finance Committee recommend to the Board of Directors approval of both a temporary waiver of the ORF policy cap and an $80 million deferral of fiscal year 2026 revenues to the ORF.
Second, Wilkinson.
Thank you. We have a motion by Andre and a second by Wilkinson. Roll call, please.
Belvedere,
Yes.
Lafayette,
Yes.
Larkspur,
Yes.
Napa County.
Yes.
Motion carries.
Excellent. Okay. I think right now I'm going to go back to look at my agenda really quick. I believe that we're at open discussion. Is there any open discussion? And sorry, I'm moving back and forth on one screen here. We have one item. We have Member Wilkinson.
Thank you. Just a request that I know you guys are dealing with so much, but now that we have another person in finance, what would be really great is still to see some more medium-term financial modeling. I know that's a big lift, but just to put that on your radar in terms of sort of, as you're working through all of this, a 5-year model would be great for the Finance Committee to just have in the background. Thank you.
Thank you for that. So there's no time sensitivity on that, I assume. Staff can do that in terms of just their overall priorities that they're trying to juggle right now. Is that okay, Member Wilkinson? They can bring this back.
Not exactly. There's so many things that they're dealing with. Just
Yeah, good.
something on the radar for the coming year.
Okay.
Thank you.
Thank you. I just want to make sure staff is working extremely hard, and we really appreciate all the hard work and bringing all these reports to us so quickly and timely. Let's see. Do we have anything else for members? Not seeing anything. Okay. So, is it fair that that was our last item and we can close? Because again, I'm not looking at my agenda. Okay, perfect. Let's go ahead and thank you everybody for the public for participating, staff for your hard work, for members for all being here and your dedication and commitment. We're on a great path. I think this is a really excellent committee and looking forward to bringing this recommendation back to the board. So our next meeting is that July, going on memory now, is that July 23rd? If you can look for me.
Jessica nodding. Yes.
Yes. Okay. Very good.
That is correct.
Okay. Very good. Thank you. Okay. So we'll be back here on Thursday, July 23rd at 10 a.m. Thank you all. Take care. Have a good summer.
Thank you.
Happy 4th.